the radical, fundamental principles of freedom, rational self-interest, and individual rights. This is the Yaron Brook Show.
All right, everybody, welcome to Yaron Brook Show. On this Saturday, August 12th, I hope everybody is doing well, having a great weekend, and ready to hear about the U.S. dollar. And we're going to do a historical analysis, a little analysis of the current situation of the dollar, where we are today, and what we can expect in the future from the dollar. Is it going to all go away? Is it about to collapse? What are the chances that the dollar maintains its status as the world's reserve currency? What does that even mean? Everything you ever wanted to know about the dollar, and we're afraid, not afraid, I don't know, to ask, you'll get it here. This show is actually sponsored by Alexis in London. And Alexis has sent me a long list of questions to answer. So I hope I get to all of them. It's a big topic. We'll see how much of this topic we can cover in one show. We'll do as much as we can. I'll also say I am by no means expert on the history of the dollar. I'm by no means monetary economics expert. So I'm going to give you an overview, some impressions of what I think, and particularly when it comes to the history. And then we can talk about, I think I know more about the present, and anybody who tells you who knows they know what the future is going to bring is lying to you. But I will give you some essential characteristics of what I think the future, or what I think direction the future is going to head in. As at the end. Alexis also asked ChatGPT for questions. So Alexis kind of asked him, what would you ask an objectivist philosopher, or what would you ask an objectivist about money, about the U.S. dollar, not about money, about the U.S. dollar? So I have 7 questions that ChatGPT would like the answer to. I wonder if ChatGPT scans YouTube, because it would be good to transcribe these answers and feed them into ChatGPT so that these answers are available in its database of knowledge with regards to the U.S. dollar. So let's hope ChatGPT scans the Yaron Brook Show videos and includes those in the body of knowledge. This is how we'll change the world. I'm telling you, we just have to create enough content to overwhelm everybody else and dominate AI, right? And AI will only be able to use, well, anyway, that's not going to happen. But this is why you guys should share. This is why you guys should like. This is why you guys should, comment on and engage with the material, because the reality is, the more we engage in the material, the more you engage in the material, the more the material gets out there, the more the material is surfaces, the more likely it is that AI will actually access it. Don't allow the good stuff to be buried, right? Keep it going. All right. You want me to share a screen for the questions? Yeah, okay. I mean, I'll do that at the end. We can look at the end at the questions. But I'll remind you, and then I'll leave you alone. I'll remind you that these shows are funded through contributions. You can contribute through Patreon. You can contribute through Subscribestar. You can contribute through PayPal, yaronbrookshow.com/support. I got a lot recently from Patreon, so Patreon seems to be the preferred avenue for you guys to actually contribute to the show. So please continue doing that. I think I've got it's still less than half of the contributors on Patreon, and we've got more than double on PayPal. But you can contribute any way you want. Please continue to contribute. Those of you who are listening not live, or who are live but haven't subscribe monthly, please subscribe monthly. It's amazing because that gives me visibility into the future, whereas Super Chat is always suspenseful. It's always exciting, right? All right, let's see. All right, I will get to the questions. Keep them coming. I will get to the questions at the end. I answer all the questions, so don't worry. However dollar amount you put in, I do give preference to $20 or more. We do have a goal of $650 to get there. We need a bunch of $20 questions or $50 questions or $100 questions. So please consider that as well. Yeah. Let's jump in. So the U.S. dollar. So money, right? Money. What is money? Money is a medium of exchange. Money is what we use to exchange for goods instead of basically money. And I'll do this quickly because I've talked about this in other shows, and I can do a whole thing about money. But money is a way to smooth out the complexities, the inefficiencies, the cumbersome nature of barter. Exchanging cows for wheat or cows for chickens, not efficient, not effective. So we have a medium, something that both the person who owns the cow and the person who owns the chickens wants. So I can exchange it for the chickens. He can then use that to exchange it for a cow after he sells a bunch of chickens. Money is what facilitates those transactions. And in that sense, money is the prevalent, the used medium of exchange. The dollar, the U.S. dollar, is the money in the United States. Those pieces of paper are money in the United States. It is the medium we use to exchange. Just like there have been periods in human history we've used gold, there are periods in human history we've used tobacco, periods in human history where we've used shells, beautiful shells, rocks, all kinds of things have been used in human history. By fiat, by dictate, by government dictate, today, the thing we use as money, as a medium of exchange, the thing we use to buy and sell stuff all the time, every day, is the dollar. And as long as that's the case, the dollar is indeed money. All right, so how did the dollar, the U.S. dollar, come into being? Well, during the colonial times, most of the money that was exchanged, that people used to buy and sell, were basically gold coins and silver coins that were primarily issued by the Spanish authorities in South America. Some of them, of course, were gold coins and silver coins issued by the Bank of England. Certainly, given the trade that the colonies had with England, a lot was there was quite a bit of currency, British currency, circulating in the United States. But the reality is, the Spanish colonies in South America were closer. Even some British traders used them, and a lot of the currency in America that was being used was silver. There were vast silver mines in Mexico, vast silver mines in other parts of South America. The Spanish had a pretty good kind of coinage operation going, and the dominant money that was circulating was Spanish silver coins. In the colonies. Now, some form of paper money was already circulating in the colonies starting in 1690. The first colonial notes were issued. These are notes that are redeemable into gold, but are exchangeable. These are pieces of paper, like the dollar, but redeemable into something, and different colonies issued them. The Massachusetts Bay Colony was the first to fund military expeditions in 1690 it issues these paper notes that when they could be redeemed into gold by the owner of the note. These notes were easily forged originally until, just interestingly, Benjamin Franklin actually came out with a technique to reduce a special printing film that basically reduced the ability to counterfeit. So it gave the note a particular something special in it that counterfeiters had a hard time replicating. And patents, and this of course became later on a way in which different patents, that now it's 3D images inside, ways in which the authorities that print the notes actually can guarantee that they are not counterfeit. That was in 1739. All right, so the Continental Congress, in order to fund the war, issued a continental currency, basically notes. Unfortunately, these were not really redeemable, and they issued a lot of these notes, and the notes became worthless during the war. Not the first time or the last time. The war creates inflation. That's exactly what inflation is. When you print a lot of pieces of paper that constitute money, and then you can't redeem them all, so you have to devalue them. And that's exactly what happened to continental notes. They were devalued. They kept being devalued. There was actually a phrase during this period in the 1770s, late 1770s, called "not worth a continental." Right? It's not even worth a continental. Continentals are so worthless. This isn't even that. It's even more worthless than that. So there was a lot of counterfeiting. So in spite of Franklin's technique, there was a lot of counterfeiting. There was just a lot of notes being issued by the government. They couldn't back them all up. They couldn't actually exchange them for gold or silver or anything else because the government didn't have, it launched the war without the kind of requisite backup, if you will. In 1785, the United States actually adopts the dollar sign. So you get, and basically the dollar sign is the U.S., where the U is overlaid over the S and the bottom is dropped out. And that has been the dollar sign since then. That was in 1785. 1791, Alexander Hamilton establishes the Bank of the United States, which is a private bank. But it is a private bank that has a national charter, and it is the first national charter, the only national chartered bank of its time. And it is basically created in order to sell government bonds, in order to raise money for the government. That's the primary reason why it exists. And other banks around the country are also created in order to help raise money. The banks at this point, the banks themselves, and we'll get to this, the banks themselves issue currency. They issue paper, exchangeable into gold. The government will only accept gold or silver as payment for taxes and payment for debt. So gold and silver are legal tender. But banks, many banks, what they do is they take the deposits you get from gold, they issue you basically a note that is redeemable into silver and gold, but also exchangeable. You can basically trade that note to merchants to get goods, and then that merchant can go to the bank and get the gold and silver. And for a long time, really from the colonial times, certainly from 1791 until really until the establishment of the Fed, and even post-establishment of Fed for a little while, I think until 1929, banks issued currency. That is, banks issued paper money that was redeemable into what you would consider real money, the backup, the thing that actually constituted what you were exchanging, the piece of paper was just symbolic. In that case, in that sense, the real money was gold. The paper was what's called a money substitute. It substituted for money and was redeemable into money. But money was either gold or silver. In 1792, the United States passes the Mint Act, which basically establishes the U.S. Mint. Right? The United States does not issue money other than it will coin coins. So you can bring your silver into the mint and you pay a small fee, and they will turn that silver into US dollar coins. And these US dollar coins will then circulate. So you can imagine a bank that has accumulated a bunch of gold dust or whatever, gold in its vaults. It can take that gold or take that silver. Primarily this was silver. And they take it in, and the mints coins that are then distributed by the bank as currency. Let's see. So it's important to note, and this becomes a big issue during the 19th century, that gold and silver were both considered money, and the government set an exchange rate. They defined a dollar as so many ounces of gold and so many ounces of silver, a combination of the two. And the ratio of the gold to silver in this basket was set, gold was worth 15 times what silver was worth, so 15 to 1. That was the ratio between gold and silver to be set. Now, there's an inherent problem with what's called a bimetallic standard. And that is, you set this ratio of gold to silver to create a unit called a dollar. But coins and money is issued as either gold or silver. And the supply in the marketplace of gold and silver changes over time. So there might be periods where there's more silver coming from the mines and less gold, and there's a shortage of gold, and you'd expect then that the value of gold would go up relative to the value of silver, but they're fixed. So it can go up. And this is an example of, in a sense, the government price fixing, and as a consequence, from the beginning of the United States, from the beginning of the United States creating the dollar, you get a distortion and you get a government manipulation that creates problems in the economy that are always, that are never recognized as that as the source, right? There's arguments, and you create special interest groups. Silver miners want to keep the silver as part of the definition of dollar. Gold miners want to keep the dollar. Financial interests want a solid, the dollar is considered solid and less inflationary. Silver is considered the more inflationary, easier to find, easier to get, more common. So you can imagine that the people who want low inflation are going to lobby for the dollar, and the people who want high inflation, who wants high inflation? Well, if I owe you money at a fixed interest rate, I want high inflation. So if you own a mortgage right now, if you have a 30-year fixed mortgage, one of the best things that can happen to you is inflation, because that'll wipe out your debt. Your debt is fixed, and yet every year, because of inflation, the value of that debt goes down. You have to pay less and less and less in real terms to pay back the debt. So people who owe money love inflation. People who lend money, banks, for example, hate inflation. Now, the other reason to hate inflation, because you also have to buy stuff. But if you have borrowed a lot of money, if you hold a lot of debt that is fixed, inflation benefits you, right? If you can imagine that if you own, if you have a property and you've got a large mortgage on that property, and suddenly inflation hits 100%, the value, your debt, the value of that debt shrinks by 50%. Every year, that the inflation is 100%, the value of your loan shrinks by 50%. You owe, in real terms, 50% less. And imagine, like in Argentina, where it's 116%, I think, and this happens year after year after year, you get wiped out. Now nobody, when you get into that point, nobody actually issues fixed rate mortgages anymore. It didn't become variable rate mortgages. But if you have a fixed rate mortgage from the period before inflation, you make a killing. And this is, of course, it was a big issue politically in the United States, primarily in the late 19th century. William Bryan Jennings, the cross of gold, and the idea was gold was going to crucify all these borrowers. So who were the borrowers? They were farmers, they were small business people. William Bryan Jennings was a real populist. He was there for the people against the special interest groups. Who are the special interest groups? Well, of course, they're the evil bankers who want a stable currency, who don't want inflation because they want people to pay back their debts. Bryant was on the side of the people who had the debts, and the cross of gold. You're crucifying Americans on your love of gold, right? This was a powerful rhetorical tool. He was he was very powerful. You might be familiar, this is a sideline, you might be familiar with William Bryan, and he was running for president. He was running for president as part of the Democratic Party. He was a populist. And you might be familiar with him because he is the lawyer that tried the monkey, the evolution case. Where was that? I forget what state it was, but he was the one fighting to fire, if you remember, to fire the teacher who taught evolution in the school, and that became a fantastic movie whose name, of course, I forget right now. Somebody will remind me on the chat. And he was the lawyer. He was a lawyer that was anti-evolution, right? William Jennings Bryan, not William Bryan Jennings. Scopes trial, thank you. The Scopes trial, so that's two things William Jennings Bryan was famous for. One is the populist running for president, and the other is the Scopes trial. So once you create this bimetallic standard, you create the kind of pressure group politics that Ayn Rand describes as defines what a mixed economy is. And as a consequence, you start getting more government involvement in the economy, more pressure on the government to shift and to change and to orient. So what you got basically was I think a change, for example, in the middle of the 19th century, from 15-1 to then 16-1. And that seems like just a little, but that impacts the value that people have in silver. It basically it creates inflation in silver terms. One of the reasons Bryant loses is because as he's advocating for silver's better because there's more of it, it creates more inflation. As he's doing that, suddenly there are massive big gold finds, both in South Africa, this is in the 1890, I think, and in California, that increase the supply of gold, and the fear that gold is somehow, constrained. There's only so supply, which is a myth anyway, but a limited supply, and therefore will drive up, will cause kind of deflationary forces and be very good for that dissipates. And therefore, a lot of his complaints about the dollar go away. But it's only in the 1890s, right? Let's just see, if I can find the exact date for you. I don't know these dates by heart, but it's in I think. So they changed it from 15-1 to 16-1, and then they keep putzing around. So there's a period, for example, where there's a lot of silver in the market, and the There's not a lot of gold, so what happens? It's called Gresham's law. Bad money drives out good money. And so really the dollar value's gone up relative to silver, but it can't be reflected in this exchange rate. So what people do is they stop using dollars. They hoard the dollars. Dollars become primarily a means to save money. And you do all your transactions in silver because it's being inflated. You want to get rid of it. You want to exchange it for goods. And ideally, you want to exchange it for gold and hoard the gold. But these things, this creates a constant, if you will, uncertainty, during this entire period. So the 16-to-1 ratio, that has changed through the Coinage Act of 1834. You get in 1861, because of the Civil War, basically the Congress starts issuing paper money that is not linked really again to anything. So it goes off a gold standard. It denies the convertibility of currency to gold, and during the war, you get that, So during the 19th century, the dollar is linked to this gold and silver. It's not, and we'll get to this in terms of modern times, it's not a global currency. It's primarily used in the United States. Indeed, in the United States, you will find people using British pounds and, again, Spanish coinage. So the dominant global currency during this period of time is the English pound, not the US dollar. So the British pound is, Britain has an empire. Britain really dominates the world. It dominates the sea. It is the most powerful military force on the planet. It is the most powerful economy on the planet. And as a consequence, the reserve currency of the world, if you will, the currency everybody wants to hold, is the British pound. Almost nobody outside of the United States is using dollars. Dollars are pretty rare outside. And when you do find them, they're often traded at big discounts. 60%, sometimes even as 60% discount. So basically, U.S. dollars are used in the U.S. during this period and nowhere else. If you want to do international trade, if you want to buy something from Europe, you're going to use pounds. You're going to convert your dollars into pounds. You're going to seek out pounds in the United States and use those to do the exchange. All right, let's see. So this bimetallism really persists for a long time, and it only officially the United States gets rid of it in 1900 in the Gold Standard Act. In 1900, gold is established as the one source of money in the United States. So the United States goes on a full-fledged gold standard where everything, all paper money, if you will, is exchanged into gold. Or in other words, to pay your taxes or to pay the government or anything to do with the government, you have to use gold. They will no longer really accept silver. All right, let's just quickly look at this. I'm just looking at Alexa's questions. When was the U.S. dollar born? I said with the really during the early part of the nation. What was the circumstances? What were the founding fathers' principles regarding what currency should be? I think the founding father who most influenced thinking about money and ultimately about banking was Hamilton. I think Hamilton believed that money should be gold. But again, I'm no expert on the founding fathers. I mean, they like everybody at the time, could not conceive of a fiat money, could not conceive of money just being paper. And to the extent that it had been tried, they were familiar enough with the history of hyperinflation in France and other places where paper money had been tried. So to them, money represented some form of real commodity, real value. And everybody at the time, the global economy at the time, the United States was a very, very small player in a global economy. The global economy had basically determined that silver and gold were the forms of money that were acceptable for trade. And I think the United States just followed along with that. It's not that they had a deep philosophy around money, although, again, I think Alexander Hamilton was the most sophisticated of all the founding fathers when it came to this. Well, the different iterations before we get to modern version, as I said, bimetallism and gold and silver, and money is issued almost exclusively by local banks. The federal government issues currency during the Civil War, during the War of Independence, and then during the Civil War. But again, it goes back, peaceful. As soon as the peace returns, it is the banks that are the ones issuing the currency. All right, so this is how kind of it works in really until the Fed. Just to give you a sense, when the United States moved to a gold standard, one ounce of gold was worth $20.67, and that was fixed. So you could take your dollar into the bank and get 20.67 ounces of gold. That was by law, right? The gold standard, of course, was suspended twice during World War I, when the U.S. was worried about gold flowing out of the United States, the U.S. corporations had large debts payable to Europeans, and in order to pay that back, the gold was flowing to Europe. That was not a good idea during a war, so they stopped that. They reinstituted it after a while, and then they ultimately they stopped foreign. So you could exchange it in the U.S., but you couldn't do the exchange out of the U.S. In particular, once the U.S. joined the war in 1917, there was no foreign exchange of U.S. dollars into actual gold. Dollars, again, being the pieces of paper. By this point, of course, the United States has established a Federal Reserve. So the Federal Reserve was established. The bill passed in 1914. In 1913, 1914, the Fed was actually established. And at this point, the Federal Reserve now basically has the ability to print Federal Reserve notes. Again, these are pieces of paper, what we call dollar bills. But these are pieces of paper exchangeable into gold. And what the Federal Reserve starts doing is asking the banks to take the gold that they have in their vaults, right? All the American banks have gold, and put gold at the Fed, and in exchange for that, receive these notes that the Federal Reserve is printing. And again, every one of those notes is theoretically exchangeable into gold at the Federal Reserve. Now, again, you've got now a new entity called the Federal Reserve, and I did a whole show on the Federal Reserve. But now that it now has control, it now has power over the banking system, it now has power over how we use money, how much money exists. They can, at any given point in time, demand that banks put more dollars into the vault. They can issue more paper money than they actually have gold in the vault. They can start manipulating the amount of money that exists in the economy, and they very, very quickly do. In the 1920s, not arguably, but obviously, ultimately creating the Great Depression. Now, there's a lot of issues around the start of the Great Depression with regard to the gold standard, with regard to the exchange rate of gold for pounds in Great Britain, and exchange rate between pounds and dollars, and so there was a lot of problems. I'm not going to get into the details of that, but all I can say is that those mistaken exchange rates, all set by government, all done by government fiat, contributed to the Great Depression, contributed to the basic massive contraction in the availability of money, the availability of gold for people to use, money for people to buy and sell and exchange and trade that happened during the early 1930s. In 1934, as one of the first acts that the new president, Roosevelt, 1933, sorry, one of the first things that President Roosevelt does, he's elected in 1932, one of the first things he does is they pass a series of executive orders and bills, significant acts of Congress, basically changing completely the monetary system in the United States. Basically what happens is that individuals are barred from owning gold. And banks no longer have any gold reserves. All the gold has to be at the Federal Reserve. All money is issued by the Federal Reserve. This is a process that had already started. Once the Federal Reserve is established, banks are expected to issue less and less and less currency, and by the 1920s, there's very little bank-issued currency. Everything is now Fed-issued currency. And in 1934, basically, bank-issued currency is gone because the banks cannot redeem, are not allowed to redeem this paper money into gold. Because you, as an American citizen, are not allowed to actually own any gold. So at this point, all the gold flows to the Fed. The Fed is the only entity now issuing currencies. And the dollar is basically pegged to gold, but it is pegged to gold now at a ratio of 1 to $35 as compared to the 1 to 20 something. So we've inflated it, if you will. Let me see if that's right. I might get that wrong. Might have got that wrong because it used to be 20.67. So you can't exchange your money for gold anymore, right? The gold is just there. The Fed can issue it. For international trade, the dollar was pegged to the same 20.67 per ounce, and this is in the 1930s. So gold disappears. In 1933, disappears inside America as money. All you have are notes issued by the Federal Reserve. Theoretically, the Federal Reserve only issues notes based on how much gold it has. So theoretically, every one of those dollars could be exchanged into gold at the Federal Reserve, in theory. But of course, in practice, nobody had the right to exchange it, except, again, for foreign trade, foreigners. For foreign exchange purposes, the dollar was set at 20.67 per ounce of the value of the dollar. All right. Again, this was connected to a bunch of different laws that were passed regulating the economy. Everything that FDR did during this period of time, he was able to do because he had now control over the money supply. Banks didn't control the money supply. It wasn't dependent in quotes, on gold flowing into the United States, or mines discovering gold. The Federal Reserve now had the ability to issue currency at its discretion. Now, arguably, during the Great Depression, the problem was not inflation. The problem was not that the Federal Reserve issued too much currency. The problem was actually that they probably issued too little currency. That is, they issued less currency than their gold reserves were. They kept interest rates too high. There was too little borrowing. And all of this kind of caused the economy to basically collapse. There's plenty of evidence that the collapse of the U.S. economy and the ever deepening state of the deepening conditions of the U.S. economy were caused by this behavior by the Fed, plus by everything that FDR was doing, by all the government spending, by all the government controls, by all the central planning. Basically, the U.S. economy came to a halt, shrunk dramatically during this period. And nothing really FDR did during this era brought the United States out of the Depression. The Depression really didn't end until the end of World War II. And one of the reasons, ultimately, the Depression probably did end is, in a sense, a return to a gold standard in 1944. We'll talk about that in a second, and a dramatic depreciation depreciation in the value of dollars. So the dollar, instead of an ounce of gold now being worth $20, ultimately, the dollar was fixed at $35 per ounce, and it remained at $35 an ounce. It remained at $35 an ounce until 1971. All right, let's see, where are we? Yeah, there's a lot of history, and there's no way. We'll see how we can do this in an hour, but this is going to be challenging. So during World War II, basically Americans are using paper money. The economy is basically oriented towards war production, and the Federal Reserve is in complete control of the money supply. World War II ends, or World War II is about to end, and one thing is clear. Basically, the world is devastated. It's destroyed. Every other industrial country in the world out there has been crushed, has been flattened, has been leveled. All that really remains is the U.S. The U.S. basically controls the entire productive functioning capacity of the world. And the United States is the only really functioning economy in the entire world, and the dollar is the only really functioning currency in the world. The Federal Reserve is the only entity out there that has significant reserves of gold to back up its paper money. As a consequence, the leaders of the free world, or not so free world, the free world basically meet in Bretton Woods, New Hampshire, in 1944, to negotiate a monetary system, a global monetary system. They all recognize that something went wrong in the 20s or 30s. And whatever went wrong in the 20s or 30s caused the Great Depression, and they do not want to return to that. So they also realize the overwhelming superiority of the United States, both in productive capacity and gold reserves and everything else. And what they establish is a new monetary system for the world based on the US dollar. So the US dollar becomes the global currency. Every other currency in the world is exchange into the dollar at a fixed exchange rate. So now we follow currencies. How's the pound doing today relative to the euro, relative to the dollar? Well, in those days, post Bretton Woods, every major currency in the world was pegged to the dollar, and the dollar was pegged to gold. So in a sense, the world had a gold standard. But the intermediary to that gold standard was the US dollar. So if you had French francs, remember there were no euros back then, if you had French francs, you knew that franc, let's say a franc was worth $2, and every dollar was worth X ounces of gold. So you knew that your franc was worth X ounces of gold. What happened during the 1960s in the United States, and really it started in the 1950s, but it certainly accelerated in the 1960s, and particularly in the late 1960s, is that the Federal Reserve, because of the Vietnam War, because of the welfare state, the growth of the welfare state under Johnson, started printing many, many more dollar bills than they had gold. So it got to the point where If everybody came to the gold window and demanded to exchange their dollars to gold, there was nowhere near enough gold in Fort Knox to cover it, because of all the government spending that the Fed had to monetize, that the Fed basically, bought government bonds to finance the deficits that the U.S. was running, to fund the welfare state and to fund the war. The actual value of the dollar fell significantly. That is, an ounce of gold was no longer worth 35, but something much more than that. But nobody knew how much, because there was no market. Now, one of the mechanism by which Bretton Woods, the mechanism created at Bretton Woods in order to try to discipline the U.S. government, was this idea that while American citizens were not allowed to own gold and couldn't exchange their pieces of paper for gold, foreign central banks, otherwise foreign governments, could, if they accumulated a bunch of dollars, they could go to the Federal Reserve and ask for gold in its stead. Now, there had been kind of a gentlemanly agreement, certainly during the 60s, that foreign governments wouldn't do that, because everybody knew that there wasn't enough gold in the United States vaults to actually pay off all the foreign reserves, all the gold that all these countries were holding. So there was an agreement that said, just use your dollars. Use the dollars to buy and sell and to trade globally. Don't go to the Federal Reserve asking for the gold. But one country refused to abide by the agreement. Guess which country that is? Which country refused to abide by the deal of not going and collecting the gold when they had lots of dollars? That country was France, under Charles de Gaulle as president. France wanted to establish its independence. France, was not a member of NATO. They had established their own nuclear program and their own military independent of NATO. They viewed themselves as separate and better, and they wanted to be treated as an equal of the United States, not as a junior partner. So the French started to send their dollars to the U.S., and ships started to transport gold out of Fort Knox to France. And other countries are starting to eye this and saying, wait a minute, if the French get all the gold, what's going to be left for us? If the French empty the coffers of the Americans, what's going to be left for us? And there was starting to be this movement where other countries were going to do the same thing. And this is the reason, basically, that in 1971, Richard Nixon, and the Nixon surprise, shocked the world, although it should have been expected. Shocked the world, came on television and said, no more. Basically, we're going off the gold standard. Dollars are not convertible into gold anymore. Dollars are basically now, the value of the dollar is going to float against gold, but they're not exchangeable. You people in other countries who thought you could take your dollars and convert them into gold at the Federal Reserve, ain't happening. We are basically reneging on the contract we had with you. Now, they already reneged in that they inflated the amount of dollars. They'd already printed way too much dollars. So they'd already reneged. But this was a manifestation of that reneging, and the dollar was completely dropped. Within 9 years, from 1971 to 1980, gold went from 35 to 800. Of course, now it's 1900. That gives you a sense of the purchasing power of the dollar, of how at least in terms of gold, how much the dollar has been devalued by the constant printing of money year after year after year after year, the constant increase in the amount of dollars that exist out there in terms of their ability to buy gold has shrunk dramatically. Whereas gold, an ounce of gold used to be $35. Now an ounce of gold is worth $1,900. But it happened really fast. I mean, again, 1971, it was $35 an ounce fixed. As soon as it became variable, it jumped from that and ultimately made it up to $500 in 1980. It then went down and went up, and gold has fluctuated since then, up and down, depending on monetary policy and how much gold. And since then, we have been on what's called the fiat money system. We have paper money. The Fed issues money it basically releases money into the economy by buying government bonds. The government issues bonds. The Fed buys them. Money flows into the economy. So whenever the Fed wants to increase the amount of money in the economy, it typically, historically, buys government treasuries, government bonds. In the great financial crisis, it did something a little different. It actually was buying things like, which it had never done before, mortgage-backed securities. Remember mortgage-backed securities? The Fed was buying them like crazy and thus increasing the money supply. In the last few crises, the Fed has been buying other kinds of bonds in order to support, the high-yield bond market or other. And there's even been talk about, maybe the Fed can buy stocks and drive liquidity into the market, drive dollars into the economy, and boost stock valuations at the same time. Luckily, they haven't done that yet, but basically the Fed now is involved in every single bond market out there, where it used to be only government bonds, only government debt could the Fed purchase. All right, so that's where we are today. I'd say there's a whole lot of other complications that have happened since the 1970s, since the dollar has gone off gold, and everything now is denominated in dollars. But I'd say that money has become a much more ambiguous concept, in the sense that, as we said, money is the medium of exchange. But particularly over the last 15 years, where interest rates were close to zero, a lot of things suddenly become like money. You know, one of the phenomena that have happened over the last 30 years is the financialization of the economy. That is, everything you can turn into some kind of financial instrument. And a lot of these financial instruments, when interest rates are close to zero, think about the fact that money doesn't earn you interest. So other things that don't earn interest and people desire and willing to buy and sell can function as money. And when interest rates are very close to zero, a bunch of financial instruments become very much like money. And I think that a lot of the ways in which the Federal Reserve and economists and the world out there measures the quantity of money is probably very misleading, and the quantity of money probably changes given the interest rate environment. And what we have today is complexity, massive complexity. And that complexity has generated a world in which I think even if you have a monetary theory, it's very difficult to measure the parameters that you're going to use in order to evaluate in order to run your models, in order to make predictions about the future. So I think we live in a world today, in a uniquely positioned world today, where it's very difficult to even grasp what the quantity of money is, how much money exists. You probably heard of things like M1 and M2 and M3 and M4 and variations of those. All of these are attempts to put a number on how much money exists in the economy. The reality is we don't have a good number. We don't know what that number is. And part of why economists have been so bad at predicting inflation and predicting when inflation will go away and when it comes and all of that is because, to some extent, we don't have a good grasp on what money is and how much there is of it in this modern economy, particularly when the Fed drives interest rates to zero. And this has caused all the uncertainty of the last 15 years. All right, Alexa says a few questions about the impact of money on the economy. So why do we need currency in the economy? We need currency in the economy to be able to exchange goods. It's the same reason we've always needed as a medium of exchange. And it's also a store of value, and it's also it tells you what things are, how valuable things are, right? It gives you a unit of account, a unit by which we can measure the value, the monetary value of things. This is worth $5, this is worth $10, that's worth $1 million. That means something. So it gives you that unit of accounting. It gives you a store of value. You can hold this, and not so much with fiat money. It preserves its value, at least to some extent. You can put it in the bank. It can grow with inflation, hopefully. But the primary reason we need it, is as a medium of exchange. Every other use is a derivative. Like, the medium of exchange is what will determine what the unit of value is going to be. If I shift the medium of exchange, if I change from dollars to yen, then now everything's going to be denominated in yens because that's what I'm using to exchange stuff. How is the US dollar helping with the fantastic growth in the 19th century? It helped by being stable, relatively stable. I mean, I would argue that the problems in the 19th century, and there were economic problems in the 19th century, it wasn't all smooth. There were all kinds of crises, lots of banking crises, were almost always caused by government intervention into the monetary standard, into this ratio between gold and silver, and too much silver, too much gold. If they just had a gold standard from the beginning, fixed it, and never touched it, the truly amazing thing about the US economy is it would have grown even faster. But you see, when you don't know what money's worth, this is the importance of having stable money. How do I make investments over the long run? Because I don't know what I'm going to get in the future, what it's going to be worth today. There's enough risk just in the business side of it, but now I've added an additional risk, which exists, of course, today, of what is the dollar actually going to be worth? What's its purchasing power? The more of that risk we entangle in with the business risk, the fewer investments are going to be made. The less we're going to expect, and the less is going to happen. This long-term thinking that business has to engage in, the long-term investment doesn't happen. Or it still happens, but less of it happens. So the 19th century growth benefited from a stable currency. Imagine if it was even more stable. You would get more production, more productivity growth, and a longer horizon for planning. And this is the key. Stable money encourages with a capital L, long-term planning. Unstable money, Argentinian money, encourages short-term planning because I don't know. I don't want to put my money away into some investment when I don't know what that money, the money itself is going to be worth a year from now. Or if I know it's going to be worth half, but it might not be worth half. It might be worth a quarter. The Argentinian inflation might accelerate. So you see how if we understand that what grows an economy is long-term investment, what grows an economy is production, and production doesn't happen in the short term, it happens in the long run. Think about the investment you have to build in a factory that it'll take you a couple of years to build and then to ramp up. And you're making predictions now about what's going to happen in 3, 4, 5, 6, 10 years. If the currency is not stable, if you don't know what its value is, how do you make those predictions about the future? How can you invest for the long run? How can you put your money away for that long? It completely disrupts and distorts economic planning, economic investment, and therefore economic production, and therefore economic growth. So the worse the currency is, and worse means unstable in terms of purchasing power, particularly if it's being deflated, the less long-term investment happens, therefore the less economic growth happens. Now, today, the Federal Reserve tries to keep the purchasing power of the dollar within certain boundaries. This is why you hear the Federal Reserve is targeting a 2% inflation. Why 2%? That's complete BS. But what really matters is the stability. If the Federal Reserve can guarantee 2% inflation forever, then I can plan. I know that my purchasing power of the currency that I have goes down 2% every year. Not good, but not horrible if I know that it's going to happen every year, if it's predictable. Now, with fiat money, I don't think it's ever predictable because the government can go crazy and do all kinds of things. It's also a question of how the money enters the economy as we're adding it and where it enters and the perversions and distortions it goes in there. But the essence is that today we make long-term investments, or some, I think we make less long-term investment than we would if we had a truly stable currency. Because as bad as inflation has just been in the United States, it never got astronomical. And it's coming back down. And we kind of assume that it's going to be about stable at 2% into the future. That's why, in spite of high inflation, the 10-year bond is still at around 4%. Because people don't expect inflation a year from now, 5 years from now, 10 years from now, to be very high. They expect the dollar to be relatively stable. You might argue that they're wrong, and you can, and a lot of people do, but that's the reality. The reality is that people's expectations are for a stable dollar, relatively stable. What were the views on what money should be by competent bankers like J.P. Morgan? I don't know, but I suspect J.P. Morgan thought it should be stable. J.P. Morgan was part of that cross of gold. He believed in gold. He advocated for a gold standard. Like other bankers in New York, they wanted stable, predictable money linked to something real. But when it was clear that government was going to intervene, J.P. Morgan was very involved in the creation of the central bank because he understood that he better get involved because his interests were at stake. Other people were going to determine his fate as a banker, and he got involved to try to shape the central bank in ways that would be helpful to the banking industry. And that's why initially the central bank was supposed to have a full 100% reserve of precious metals, of gold, and currency would be based on that. It didn't last. Anybody could have predicted it wouldn't last. They cheated. They started printing more money. And you gave the central planners the authority to determine when to cheat and how much to cheat. Turned out to be a disaster, right? Is this privilege abused by the U.S. government? How is it used as a tool for sanctions and foreign policy? Is it a vapid usage of the currency? I don't know about how it's used foreign policy-wise, but it's clearly, the fact that the dollar is now linked to anything is clearly easily abused by the government. It can run massive deficits. The assumption is deficits are no problem because the government can always print more money. That ability of the government to print more money distorts the value of the dollar. It distorts the predictability of investments. It distorts the way investments are made, the duration of those investments, where in the economy they're made. So the privilege is abused. The federal government is likely to print more money, and that's why we have constant, systematic, ongoing inflation. It might only be 2%, but it's not zero. It's not stable. It's constantly changing, which creates massive uncertainty for investors. Overall, does it help by facilitating global trade or hinder the world economy by manipulation? I think it hinders. I mean, global trade is helped by having a standardized currency. So the dollar helps global trade. But it would help global trade more if it was backed by something like gold. It would help global trade more if all our partners everywhere in the world knew that the dollar was not, relatively speaking, the most stable currency in the world, but that it was actually stable, that is actually pegged to something and nobody could cheat on it. I think that would enhance global trade even more. So the fact that we have a dollar today, The fact that it is the global currency in the world today absolutely encourages global trade, facilitates global trade, and is a great thing. But it also, the fact that it's dependent on politics, the fact that it's dependent on Federal Reserve, also limits and distorts, what could really happen. So you could have a much more productive world, much more trade, a much stronger U.S. economy, much more economic growth, and much more production if the dollar was more stable than it already is. And that can only be achieved by privatizing it, by getting the Federal Reserve out of the business of money and having money be private, having money pegged to a dollar, and basically you won't be able to issue more money than you have gold, which would give it about as stable an environment as one can imagine, and it would help. That stability would help long term, and it would hold long term. Would help investment, would help trade, will help with everything. All right. How is it related to EM countries defaulting, emerging market defaulting, such as the 1997 Asian crisis, or Mexico defaulting on its debt? I mean, you can see that today. Turkey's had problems, and this is unfortunately what happens. Is that, for example, in Mexico and Turkey and a lot of emerging markets, what they do is, let's say you're a company in Thailand during in the 1990s, and the economy is growing fairly fast to a large extent because you're now, in a sense, in a region that's exciting because of what's happening in China, your region where a lot of American companies are more likely to come and base themselves, or Americans are more likely to buy stuff from, or that China is buying from you as part of kind of the globalization that is happening. You're a company in Thailand and you want to borrow money. Now, if you borrow in Thai baht, the local currency, interest rates are going to be very high because people don't know what the baht's value is going to be tomorrow. They don't trust the Thai central bank not to dramatically inflate the currency, because that's what emerging markets have done historically. They've inflated their currency. They've caused their currency to shrink in value dramatically. So what you do, and this is a period where the Thai baht was fixed to the dollar, it had a fixed exchange rate. What you do is you borrow in dollars. And you think to yourself, it's not a problem. I'm selling goods overseas. I get dollars in. Or I can always take my baht and go to the bank and exchange it for dollars and then pay the interest payment using dollars. But then what happens when the Thais start inflating their own currency? But the dollar is pegged to the baht. It can't change. Well, people then want to hoard dollars. They want to hold on to dollars because dollars, I don't want to exchange my dollars for baht because I'm going to get too few of them. So they start hoarding dollars, which means if the government, if companies are trying to import stuff from overseas, they don't have enough dollars to be able to send overseas to import stuff. Everything import, they can't find the dollars. Nobody will sell them dollars because nobody wants to hold baht, because the baht becomes too cheap. The baht is actually worth less than the exchange rate. And what you get is this crisis where you can't import anything. And you can't import anything, so a lot of stuff you import is used then for exports, and the economy starts collapsing, and everybody's hoarding dollars, and yet your businesses in Thailand still owe stuff in dollar bills, and okay, so So could use those dollars to send overseas, but they can't. It's hard for them to get new dollars because nobody will sell them dollars because nobody, again, wants the baht. Nobody wants to exchange baht to dollars. And the central bank, the Thai central bank that was doing these exchanges, is running out of dollar reserves. They don't have any dollars left because everybody wants to give them bahts and take dollars. And what happens in circumstances like this, what happened in 1997, is that they broke the exchange rate. So the Thai government said, okay, we don't have enough reserves. We can't give you the dollars. We're going to float the exchange rate. And let's say the exchange rate was $1 was 1 baht. It wasn't, but I'm just making that up. Suddenly they delinked it, and suddenly to buy a dollar meant you needed 5 baht to buy $1, which means the baht went down in value by 80%. Now, if you're an exporter, sorry, not if you're an exporter. Now, if you have all that debt in dollars, before you could exchange 1 baht for $1 and you could pay the debt. Now you have to exchange 5 bahts for $1. You might not have 5 bahts, and you default. You go bankrupt. You can't pay your debts because they're in dollars, and the dollar's stable. The baht is not. Hopefully that's understandable. Same thing happened with Turkey recently. A lot of Turkish companies borrowed money in dollars because they get a lower interest rates when they borrow in dollars. But then suddenly the Turkish lira started to lose value. And every time they went to exchange lira for dollars, they had to pay more and more and more for the dollars. And it got to the point where they didn't have enough lira. They didn't have enough local currency to get the dollars to be able to pay off their debt. And they had to go bankrupt. They had to default. They couldn't pay off their debts. So even though they got a low interest rates, ultimately it worked against them because they still had to convert their local currency into dollars to pay off their debts. So this is how you get emerging market debt defaults, primarily because the local governments are irresponsible. They print money. It's why people don't want local currency debt, but it causes the companies within these countries to borrow in dollars and then they can't pay it back. There's no way for them to get the money to pay it back. There's no way for them to get the dollars to pay it back. All right, how's it being manipulated by the Fed throughout history? What means that they use? How they more modern provisions? I talked a little bit about that. QE was basically a program during the 2000 teens, basically to buy up huge quantities of debt that the government was issuing, but then also, as I said, mortgage-backed securities and other types of securities ultimately, and to provide liquidity into the markets as a way for dollars to flow into the market. It was kind of funny because then a lot of those dollars were held by the banks in reserve at the Fed. So the Fed was issuing money and then taking it back. So it provided liquidity, but it didn't add money to the economy. And you could all of this is ways in which the Fed is just distorts the supply, distorts the economy, distorts investment, it distorts decisions in terms of buying and selling and so on. And I think ultimately results in low economic growth. And I think that's what we saw during the 2010s, during both Obama and Trump and now Biden, is you're just seeing low economic growth. And low economic growth is to a large extent not only driven by regulations and by government spending and all the problems that government spending creates, but it also driven by the monetary policy of the Federal Reserve and the instability about people legitimately don't understand how much money is in the economy, what interest rates are going to be in the future, is there going to be inflation, isn't there going to be inflation, what causes inflation. It's all become so complicated, it's hard to predict, and that lack of ability to predict reduces the amount of long-term investment, therefore reduces the amount of economic growth. And finally, he asked how much value has it lost since the beginning of its existence. I haven't looked this up, but I think it's something like 99%. So a dollar today is the equivalent of 1 cent. 1 cent before the Federal Reserve was created. So the Federal the Federal Reserve is basically devalued the dollar by something like 99%. All right, we've got still questions about the future prospects of the dollar. So I will get to those. But what I'm going to do with those is I'll do them in the next show, which will be on Tuesday, right? So Tuesday, we'll talk about the future of the dollar. So that'll be kind of a part 2 of today's show. And then I'll also, we've also got these questions for the objectivist about the philosophy of money. So we'll talk about those as well next time. I had a feeling this would take too long. So I will do this all on Tuesday. We'll see what else happens in the world. I might have to add a topic to this, but certainly this will be a part 2 to that. All right. We are way behind on how much money we need to raise the $650. And I've got a bunch of questions. We've got a lot of questions. Almost all of them are $2, $5, $10 questions. So no more $2, $5, $10 questions. If you want to ask a question, it should be $20 or more, hopefully more. We've got a $500 still to make up to do this. I mean, we haven't even gotten to the $250 mark, which is just for a morning show. And we've already gone 1 hour and 15 minutes. So sometimes we raise the money like that. Sometimes it's slow. Today is slow. So please consider supporting the show, value for value. If you like these long shows, if you like these history shows, if you like these economic shows, please show your appreciation. You can do it with a sticker, just supporting the show. You can do it by asking a question with a super chat. Either way is great, but please consider doing it so that we can get closer to our target and justify doing these kind of shows. Of course, the show was sponsored, so we do it anyway, but I still need to see the supports and the love and the value for value on the individual shows. So please consider using dollars or any other currency you wish to support the Yaron Brook show here. You can even use Bitcoins. We can figure out a way how to do that if you so insist. And when we talk about the future, we'll talk about Bitcoin and crypto and all of that as well. All right. Sita Bria Bob, something like that. Already a monthly contributor, but I get far more value that I give and just wanted to even up the account somewhat. Thank you for the $20. Really, really appreciate that. Thank you. Zvika just did $100. He says, thanks for the Oppenheimer movie review. My pleasure. It's definitely, I think Zvika's seen the movie twice already. It's definitely a movie I recommend people go watch. Nothing else. It's a very cerebral movie, and it'll get you thinking. It's the kind of movies that I want Hollywood to make more of, in a sense that it's a thinking person's movie. You agree, disagree. There's certain things I didn't like about the movie, certain things I did like the movie. But I want intelligent movies. I want movies about interesting topics. I'm happy that these superhero movies don't seem to be as successful as they used to be. So let's do more. Let's make more movies like Oppenheimer, please. All right, I need more Zvikas to come in and say, thanks for doing a show on money. This is great. Like $100, and then we can easily get to our target that way. Thanks, Zvika. All right, Kathleen says, how does all this affect gold jewelry? Where does it come from? I mean, basically, gold jewelry is a use of gold, one of the many uses of gold. And gold jewelry is affected by the value of gold. So in the 19th century, gold jewelry basically didn't change in value because an ounce of gold, however many ounces of gold go into that jewelry, was constant. So the jewelry didn't appreciate in terms of dollars. It just kept its value. So if an ounce of gold was worth $35 and you had 5 ounces, a jewelry with 5 ounces in it, then it was basically worth 5 times whatever it is. Now, I think jewelry sells for more than just the weight of gold because it has aesthetic value. It has jewelry can be rare. It could be a unique design, a unique designer. So gold jewelry will get its value from two things: from the value of the gold in the jewelry, because you could melt it down and sell it, so that gives it a floor, and then the rest of it is the aesthetic value, the sentimental value, whatever else value that is associated with it. Today, of course, the value of that jewelry in terms of the floor fluctuates with the value of gold. As gold is at 1900, the value of the jewelry is different than if gold goes down to 1500 or if gold goes up to 2500. It will change. If you believe that gold represents constant purchasing power, then that gold jewelry, the floor of it is always the same purchasing power. I don't believe it is a reflective of purchasing power anymore, but there are some people who believe that gold is a reflection of purchasing power and always will be in some sense. You could own, if this is related to the forbidden ownership of gold, you are allowed to own gold jewelry, but you are not allowed to own gold coins, gold bars, and of course this was a way to finally confiscate all the gold that the banks owned, so that there was no investable gold or gold as currency, not gold as jewelry, but gold as currency. You could use gold for electronics or whatever you needed. You just couldn't use it as an investment or as a form of money. All right, we're still about $400 short, guys. $20 questions. $20 questions. There's a lot to ask about this topic. Matthew says, just finished MBA, though, so I'm able to catch live shows again. Oh, excellent. Congratulations on graduating with an MBA. That's fantastic. Yaron, is a PhD worth the several years and cost? Maybe you could do a show on education advice. I mean, it depends on what you want to do. So it's kind of a question that cannot be answered without a lot of context. I mean, what we need is the context of, what do you want to do in your life? Do you want to be a professor? Do you want to teach? Do you want to write research articles? Do you want to just use the PhD as leverage into a better job? That really depends on what kind of jobs. Most companies don't hire PhDs, only in certain industries. So you would really have to give me a lot more information about it. But it's rare that getting a PhD, in particularly in business, is of value outside of academia. That is, it's worth getting a PhD if you want to work in academia. And academia is a particular kind of work with a particular functions that you're going to be involved in, primarily teaching and writing academic articles. If that's your passion, if that's what you want to do, then absolutely. But if it's not, then there are only a few fields out there where PhD makes sense in a sense of getting into that field. I don't know. I'm sure that if you got a PhD in artificial intelligence right now, you would be headhunted and you would get a great job in the tech industry somewhere and get paid a lot of money. But other than that, there's not a lot of PhD degrees that are valuable outside of academia. Some, but not that many. Catherine says, come on over, YBS fans. Yes, where is everybody? And everybody who has the ability or willingness to fund the Yaron Brook Show seems to have disappeared. All right, Michael says, if AI ramps up economic growth to 3 to 4% a year, will quality of life and standard of living skyrocket even without significant tax and regulatory reform? Well, I mean, by the very definition of economic growth going up 3 to 4% a year, that means living standards are going up. They might not be skyrocketing, but they're going up. It's kind of the very essence of economic growth says standard of living go up for the most part, usually, right? The two are highly correlated. So even without significant changes, technological change can improve standard of living even without significant tax and regulatory reform. Absolutely. John says, why don't you invite Charles Murray to discuss IQ tests, not a debate, but just a discussion? Why not listen to a mainstream expert like Murray? I mean, a number of reasons. Murray has a stage. There are millions of people. You want to learn from Murray, you could go and watch like 1,000 videos by Charles Murray. What am I going to add to it? There's nothing for me to add to it. I've met Charles Murray. I've talked to Charles Murray. I don't particularly value Charles Murray's opinion about things. For me, right? So, what would be the purpose of me interviewing him, right? So I interview people because I want to expose you to their ideas. These are people that you wouldn't find in the mainstream. But somebody in the mainstream, I'm not going to interview. I'm not interested. You're interested in their ideas, go find them. And certainly if I was interviewing Charles Murray, I wouldn't interview him about IQ because I don't think he knows that much about IQ. The reality is I don't think he's a particularly good statistician or particularly good at anything like that. I mean, he's taken data and interpreted it in a particular way. I'm not sure his interpretation is legit or the right one. I don't think he's necessarily qualified in that field. If I wanted to discuss IQ tests, I'd go to like a psychology department and find a professor who specializes in this. I wouldn't take a public intellectual who's just interpreting other people's results. I'd go to the source. I'd go to the people who actually study IQ and study intelligence, more importantly. And they will tell you if IQ captures intelligence and to what extent. And so it's the exact opposite of what I want to do with my show. I don't want to interview conventional wisdom people. You can get that from anybody. I want to interview people who have a different perspective, something new to share with you, so you guys are exposed to something different, not conventional. Now, if somebody wants to set up a debate between me and Charles Murray, I would do that, not over the IQ issue, which I think is a marginal, unimportant issue. The only thing that makes the IQ issue interesting, have any relevance, is the use that the racists make of it. Other than that, who cares? Nobody cares about IQ. And again, intelligence, I care a lot about. But IQ as something you inherit, as something that is coded in your DNA, is uninteresting. I don't find it interesting. The only reason I ever talk about it is because the racists bring it up. And the racists bring it up, unfortunately, because Charles Murray brought it up. Anyway, so it's not an issue I'm interested in. I talk about it only because it's out there in the culture. But intelligence is super important. I'm super interested in intelligence. It's why I'm interested in education. It's why I'm interested in freedom. It's why I want private education. It's why I'm interested in an educational system that doesn't penalize ability. It's why I'm interested in an economic system that doesn't penalize ability. Quite the contrary, leaves people free to be able to be as able as they can be. And what the distribution across different groups is and all this stuff, my interest in that is exactly zero. It's meaningless. I don't care. But I only care because the racists care, and therefore I'm combating racists. That's all. That's all I care about. So I don't understand the interest in it. If you're a psychologist and you're interested in intelligence and you're studying intelligence, then you should have a deep interest in what does IQ measure versus what do other intelligence tests measure. Is IQ predictive or isn't it? Because that's your field. It's not my field, and I don't care about it. It's uninteresting. Michael says, if you understand how frequently people cope by projecting, you would learn to take absolutely nothing personally. Yeah, I mean, I think that's it. I mean, I have a different view of that. I basically say, whatever people tell you, it's on them, right? And if what they're telling you, if they're critical of you and they're right, then you should thank them. And if they're wrong, which is a problem they have, not you. You don't have a problem. In other words, criticism is never something you should be upset about. Justin says Bitcoin is the future. I'll talk about Bitcoin on Tuesday. Maybe it's the future. I doubt it, though. Clark says, you say nihilism a very tiny percentage of the population, but I see nihilism everywhere. Just look at the YouTube comments section. People are nasty and horrible. And, people being nasty and horrible doesn't mean they're nihilists. And nihilism is a real hatred of the world, a hatred of reality, a wanting to see the world burn. And I don't see that as a mass. Yeah, I read my YouTube channel. I see a lot of ignorance. I see a lot of stupidity. I see a lot of just nastiness. And some of it's nihilistic, but also Remember, people who leave YouTube comments are like a fraction of the population. They're not the people actually working out there. They're not the people producing. They're not the people creating. If you go work for a company, if you go to Silicon Valley, if you go to, I know you all hate Silicon Valley, but if you go to Silicon Valley, if you go to Austin, Texas, if you go to a company, if you go to a place of business, if you go where people work, particularly in more advanced technologies, or you go to a biotech company, you won't find nihilists there. I mean, these are people who are changing the world. These are people who are creating and building and making and building stuff. Maybe they let off some steam in the evening by writing nasty comments on YouTube. Does that turn them into nihilists? I'd rather focus on their ability as producers and their ability to produce than to focus on the fact that they can be nasty as well. And I don't condemn everybody as nasty as nihilism is about as ugly a thing as a nasty and evil a thing you can accuse somebody of. So beware. And again, most Americans are productive, friendly, responsible human beings, one way or the other. I mean, the Antifa people are nihilists. And they devote their life to destroying and tearing apart. And even them, they do it for a few years and then they go and they find a job and they become bourgeois. So it's very easy to become pessimistic about the state of the world by reading YouTube comments. Piece of advice, don't read them. Or if you read, don't take them too seriously. Same with Twitter and Facebook and all that stuff, right? I mean, just concentrate on the positive. And the positive is, wow, look at what an amazing world we have. Somebody is building that. Somebody is making it. It can't be a bunch of nihilists. Michael, based on what you said the other day, I don't think being a Mensch means being an altruist. I always thought it is being benevolent and honest, a good guy to be around. I mean, given the Jewish guilt associated with it and everything that it's wrapped up in this concept of Mensch, I think there's definitely an altruistic element. All right, people, my last time I'm requesting, because we're running out of questions, last request, we're $400 short. It's important that we meet our targets. It's important to fund this show. The show doesn't fund itself. Yes, monthly contributions are a big part of that, but so is the Super Chat. We have certain goals for the Super Chat. We're $400 short of the goal for today. It would be great if you could make that. Now, if all of you, instead of doing the Super Chat, become monthly contributors, go to Patreon and give something on a monthly basis, or go to PayPal and do a monthly thing, then we can stop doing the Super Chat. But as long as we're still relying on Super Chat, it's part of how this happens. All right, Frank says, from the free market point of view, was the Boston Tea Party justified, the idea of destroying goods or products because there was a heavy tax or tariff on it? Well, there is no free market point of view. You can't think in terms of a free market point of view. There is a liberty point of view. There's a freedom point of view. There is a point of view that relates to fighting for liberty, fighting for freedom, fighting for your own life. And that's the point of view of the Boston Tea Party. It's the point of view of, I don't want to be ruled by an authoritarian. I won't tolerate this, and I'm going to stand up to them, and I'm going to reject this idea of a tax, and I'm going to do something to let them know, let the authorities know that I'm serious about this. Now, should they have thrown tea into, the people who primarily lost because of the throwing of the tea were private entrepreneurs. It was a symbolic act. I wouldn't have blamed the merchants who lost the tea for suing the people who threw the tea into the Boston Harbor. The merchants are the ones who lost. I'm sure they probably weren't insured against this, but I don't know. I would have much rather, if you want to fight against authoritarianism, fight against authority. So figure out how to demolish something that the British government owns rather than something that private individuals own. So I'm not a huge fan of the Tea Party per se, but it reflected a certain political pro-freedom sentiment, and that is fantastic. Linda, thank you for the $20. Linda did a sticker. You too can do a sticker. We got about 70 people watching right now. A few bucks from everybody, and we're easily above our target. So thank you, Linda. We've also got 2 additional $20 questions from Andrew. Is there a connection between skepticism and conservatism? Or what do you view as the political implication of skepticism? Well, I mean, the problem with skepticism is it has quite a broad consequences, and they don't have any particular, I don't think, particular political manifestation. You can go right or you could go left. Certainly conservatism is one manifestation. If you're skeptical about the world, if you don't know truth, we don't really know reality, if we can't tell cause and effect, we don't know what works and what doesn't work, then the best we can do is what we did in the past. The best we can do is learn from our traditions. But there's no guarantee it'll work again. Even their skepticism will say we can't tell. But it's better than nothing, and we certainly don't want to try new things because new things are even more uncertain. We certainly don't know how they're going to turn out. There are no principles. We can't rely on principles. So tradition is as good as it gets. But skepticism can also lead to the kind of postmodernism where everything breaks down and everything is disintegrated and we don't know anything. And at least there's some central authority of smart people that maybe can figure something out, but most people can't know anything or any time. So it can also lead to the kind of, and it did indeed, lead to the kind of postmodernist perspective that you're seeing today dominate the left. And therefore what we need is order, because left our own devices we get complete chaos because nothing is true, there's no objective reality. And at least what the government can do is give us order, and that's better than nothing. And that's to some extent what you get from the left. Right? So skepticism leads no way good, not in its philosophical sense, right? Philosophical skepticism. Stephen asks, coin collectors did not have to turn in their gold coins, but it was announced that you could keep just one coin of a certain date and mint mark. None were ever checked. But yeah, if you were a collector. But again, you couldn't hold gold qua investment, qua money, qua store of value. That was banned. So this is why one of any particular minting, so that you didn't have a collection. Thank you, Stephen. I appreciate the additional information. But the whole point was to make clear that money was a dollar for internal purposes in the United States. Money was no longer gold, and even though there was a gold standard, it meant nothing for the Americans in America, and they certainly couldn't own the thing itself, because then once you own it, you had to have some kind of exchange rate and how to buy it and sell it and convert it, and they didn't want to convert it anymore. They didn't want gold to be money. They still understood that you needed something to serve as a medium of exchange for international trade, and therefore they created an international trade system built around gold. But the only reason they needed gold was so that the rest of the world would trust the United States not to cheat. And then the United States cheated anyway. And then once gold went away, the dollar still was the global currency. And it was the global currency primarily because, as much as they didn't trust the United States government anymore because the United States government had cheated, they trusted everybody else even less. So when the United States had high inflation in the 1970s, the rest of the world had higher inflation. The only place that didn't have really, really high inflation during that period was Germany. But pretty much everybody else had high inflation. The United States was still better than everybody else, so the dollar continued to be the reserve currency. It wasn't because of Saudi Arabia. It was because nothing was because of Saudi Arabia. Inflation wasn't because of Saudi Arabia. We got less oil. We had long oil lines because of Saudi Arabia, but not inflation. Inflation is not a phenomena of a shortage of a good. That means oil prices go up. It doesn't mean inflation goes up. So the difference between relative prices changing and the price level is changing, which are completely two different concepts. We can talk about that next time, or you can ask a super chat question about it. Mark says, it seems like you've done a Yaron's Rules for Money show. After all, how has your week been, Dr. Brook? Who suggested this topic? This is Alexis from London suggested it. Unfortunately, I don't see him on the chat, but he's probably busy today, and I did let him know in the last minute, but he'll listen to it afterwards. And he not only suggested it, he funded it. And you can fund a show too. $1,000 to sponsor a show, your topics, your questions. Sometimes it becomes two shows, which I think this one will become, because we'll talk about it next time. We'll talk about the US dollar as a reserve currency. We'll talk about, it didn't remain a reserve currency because of Saudi Arabia. It remained a reserve currency because it was the one currency the rest of the world, relatively speaking, trusted. It remained the reserve currency, not because of Saudi Arabia, it remained the reserve currency because the United States had the largest, most dynamic economy in the world. And everybody wanted dollars because they wanted to invest in the United States. They wanted American government bonds because they knew the American government would always pay them back, and they wanted to invest in American real estate, in American companies, in American stock market, in American production. To do all that, you need dollars. So, and they wanted to do that because America has the most dynamic, exciting, economy in the world. Whether we think it's nowhere near as good or not as it could be is a different question. But the reality is that it's better than anybody else. Low standard, but still a standard. Wes just did $100. Thank you, Wes. Really appreciate the support. Wes is got us quite a bit closer. Wes and Sika got us quite a bit closer to our $650 goal. There's still a short window by which you can ask a question. Why did Rand remain on good terms with Greenspan when it was clear to Harry Binswanger that he had abandoned free market economics and gold standard? I don't know. You'd have to ask Harry, and I don't know that if it was clear to Harry, it was also clear to Ayn Rand. That is, I don't know that Harry told Ayn Rand that he thought that. I'm not sure. I'm not sure he did. I haven't heard it. I don't know why Ayn Rand stayed close to Alan Greenspan. I think she hoped that he had not given up on that, that he had not abandoned it. I don't know that. She also hoped he would be a force for good, even if he had come to the point where he didn't think that the gold standard was realistic. I don't know when exactly Alan Greenspan abandoned market economics, free market economics, and the gold standard. I don't know when that happened exactly. Certainly by the mid-1980s, it already happened, and there's plenty of evidence for that. But Ayn Rand died in 1982, so sometime in the 70s, did she know that he'd given up on that, or did she just think that he was doing what he could, he'd like to do more, but this is all he was possible for him? Alan Greenspan was chief economic advisor to Gerald Ford, for a year and a half. So, again, just because Harry knew something doesn't mean Ayn Rand knew it as well. And I don't know what evidence Harry had for his knowledge. What are my thoughts on quantitative tightening? Well, I think if you ease, you got to tighten. So I think they've got to tighten. They have no choice. I think it's good. How fast you tighten, I don't know. But so far the Fed has done a decent job in tightening, while not yet driving the economy into recession. Now, we might still be heading to that recession. We might still get there. But, you have to say so far so good. And, so it is, tightening is necessary. It's not going to go smoothly. It's not going to go. It's distortive, but the real distortion is the Fed's existence. The real distortion was the expansion, the quantitative easing, and now you're going to distort on the tightening. Yeah. So far, unemployment has not risen in spite of it. So far, it hasn't happened. Justin says, why would anyone care about gold when there's Bitcoin or crypto? I'll talk about that next time, but why does anybody care about Bitcoin and crypto when there's gold? I can hold gold. I know the value of gold. What is the value of Bitcoin? Today? What's the value tomorrow? What's the value a year from now? What was the value of it 2 years ago? Why should anybody adopt crypto? I mean, Bitcoin? You know, is the government going to allow it to be successful? I mean, there's a million questions you have about Bitcoin. Why would anybody care about Bitcoin? And why would anybody trust Bitcoin as money when it has no tangible value? It's not very usable. I actually think other cryptos are more interesting than Bitcoin. I've talked about this. Well, partially, you know the value of gold because there's a long history of gold maintaining its purchasing power. There's zero evidence that Bitcoin maintains its purchasing power. There's negative evidence. There's evidence it doesn't. And the other thing you know about gold is that you can use it for other things. That, as you know, as mentioned earlier, jewelry, tech industry, there's all kinds of uses for gold, and the people like gold. It's shiny, it's bright, and that if the world came to an end tomorrow, what would you rather have, gold or Bitcoin? I mean, it's not even close. If the world comes to an end tomorrow, there's not going to be electricity. Bitcoin is worth exactly zero at the end of the world. Gold, I can always trade at the end of the world. There's always somebody who will be willing to give me food for gold or give me weapons for gold. It actually has a tangible value, whereas Bitcoin relies completely on civilization. So it's not the only reason I own gold is because there's a small probability that civilization will end and I want to be able to use it to trade. But that's exactly why I wouldn't own Bitcoin, because Bitcoin is useless when civilization ends. And between now and the end of civilization, dollar bills are pretty good. What I want, Bitcoin's worth 60,000, 20,000, 29 right now, 15,000, might be worth 100,000 one day. I don't know, maybe $1 million one day, but I don't know. It could be worth zero one day. Justin says, Mike Mazza, Jason Rheins would be good guests. Yes, they would be. Probably we'll have them on sooner rather than later. All right. Thanks, everybody. We made a dent at least in our target, so I appreciate that. Thanks to all the super chatters. Thanks for asking all the questions. Thanks again to Alexis for sponsoring this show. We will continue this discussion about the future of the dollar on Tuesday. I've got a whole series of questions here, so that will happen. And I'll talk to you all, before Tuesday. We've got a show on Monday, so we'll do the news roundup on Monday. Talk to you soon. Bye, everybody.